Onto your market news now. Asian markets posted positive gains, joining in a global rally as market players focused on more of the earnings season and less so on the longer-term inflation threats. Positive data out of the United States, also indicated that there may be positive momentum in that country's growth story. Japanese stocks were one of the biggest gainers on the day. The Nikkei share average ending 1.81% in the black at 29,069 index points. Hong Kong markets were also on good form, with the Hang Seng index closing up 1.48%, closing at 25,330 index points. Mainland China was also positive, although not to the same degree. The Shanghai Composite Index finishing up 0.4%. In the United States, stocks surged on Thursday as companies including Morgan Stanley and United Health gained following strong results, while data on the labor market and inflation soothed worries about the outlook for higher rates. The S&P 500 gained 1.7%, the Nasdaq Composite gained 1.71%, and the Dow Jones Industrial Average gained 1.55%. The local market is also running in positive territory following international trend, and the rand is also trading on better form. The gold price has lost some steam, perhaps on the back of the risk on psyche in the market, while Brent crude oil remains elevated above $84 a barrel. Let's take a look at the indicators. For more on the markets, I'm joined by Martin Harris. He's from IG South Africa. Thanks very much, Martin, for joining us. So global markets appear to have have had a very good run recently, which is quite a different story to what we saw earlier in the week. So what's changed?
Thank you for having me, Napu. I think that really global markets are all sea-facing this morning. Yesterday's results with both the US earnings expectations being met, so the US banks have performed markedly better than what we were seeing towards the middle of this year. And on top of that, we also have a positive announcement regarding the inflation situation in the United States. Effectively, US consumer inflation or producer inflation came in lower than expected. And that has really sent markets back into a risk-on atmosphere. That's why we're seeing gold slightly softer, just by under 1%, down $14. And asset and money, instead of going into cash, savings, gold, and bonds, now going back into the equity markets. And South Africa is seeing some of that.
Yes. So you do pardon me, Martin. You do mention that, of course, South Africa is seeing the benefits of this global trend. Are there any particular sectors in the South African market that are driving today's better performance?
So what we've seen is that the elevated commodity prices outside of gold have really boosted the South African commodity exporters. The PPI numbers came out of China showing that the manufacturing prices have increased 10%. So that drove Australian markets this morning, which then led on to South Africa today. The likes of BHP Billiton, Anglo American, and Exxaro, Kumba Iron Ore, those type of producers have really done exceptionally well. The challenge that they're facing inside South Africa is actually exporting commodities at these elevated prices. So what is happening, something like Durban Port, which is the main export port for iron ore in South Africa, going up to Richards Bay, they are struggling to actually meet demand. Effectively, Transnet's system has actually decreased in capacity steadily over the last 5 years. And so we've been at our export maximum in commodities for the last 3 years. And so the businesses are struggling to actually capture the elevated prices. Coal also at all-time or at 10-year highs. So for those businesses, they really are enjoying the current market environment.
It is ironic that you mentioned that coal is also doing rather well, and everyone's talking about how dirty it is and how financial institutions should no longer invest in it. How much longer can coal enjoy this kind of run?
Well, there's a global shortage of coal at the moment, and coal is still seen in some places as a slightly cleaner form of fuel compared to running diesel. So if you look across parts of the Arab Peninsula, they are suffering large power outages. Lebanon receiving days at a time of no power, and they run diesel generators to power their electricity. China also experiencing power outages, and that's due to environmental concerns in China, where they've effectively reached a ceiling in the type of pollutants that they're willing to create. And so they are reducing the amount of power generated. And the story there is that there's an environmental reason, but really the Chinese government are trying to bring down the price of energy commodities because they are the number one consumer in the world. I think for coal and iron ore, those two products combined China represent 60% of demand globally.
Now, with there generally being a feeling that inflation is no longer going to be a short-term thing in nature, particularly in developed economies, and of course we're seeing central banks in the developed world beginning to tighten monetary policy or getting ready to, what sort of pressure does this bring to bear for the local Reserve Bank? And do you think that they're going to pull the trigger sooner rather than later, even though the local economy is not doing terribly well?
It is a difficult situation. So in the United States, their Reserve Bank also has a mandate to focus on employment as well as inflation. In South Africa, we focus on inflation. Our inflation is primarily driven by dollar imports because we have no control over prices. As the dollar strengthens, the cost of living in South Africa goes up. And so we're seeing this, with oil prices. We're seeing this with food inflation. And so in order to combat that, we increase interest rates in South Africa so that our bonds can attract more investors and the rand strengthens. And that's how we typically aim to control inflation on the dollar basis. And so the expectation from economists locally is that only next year the SARB will increase interest rates, but we're looking all the way to 75 basis points, so 0.75%. Which is much higher than what we're seeing out of the developed world. They'll be looking for increases of 25 to 50 basis points maximum.
Seems a bit unfair, but there you go. Thank you very much, Martin, for your time. That was Martin Harris. He's from IG South Africa.